Welcome, people, to the Visionary Podcast. It's your man, Brandon, here. I hope that you and your families are doing well and safe during this time. Today, we're going to be talking about properly addressing credit challenges and credit issues during COVID-19. So we are in the month of November. There's a lot going on in our country, for sure. We've been effectively dealing with COVID-19 for the last 8 months. And so it has affected the country in so many different ways, whether it's affecting families who feel squeezed in their homes. Unfortunately, so many people have lost their jobs. Different industries are now dormant or going out of business. It's affected the economy tremendously. So, we've all had our different challenges. Unfortunately, so many people have lost family members or, have gotten sick themselves. So it's really a challenge that we have faced regardless of where you're from, regardless of what language you speak, regardless of what you look like. We've all had to face this and deal with this together. Today, though, we're going to talk about, how do you properly address credit issues and credit challenges during this specific time? So basically, here's what I'm first going to say. Number one, if you're still working and you have been working, then you're going to address credit challenges different than if you've lost your job, if you've been furloughed, if you've been laid off, or if you've had some kind of issue like that take place. But generally, during any time, no matter what, the number one thing you always want to do with regards to your credit to keep your score healthy. What do I mean by healthy? As a mortgage broker here at Visionary Lending, as far as I'm concerned, healthy is going to be that 680 plus. Of course, once you get into the sevens or into the eights, then that's fantastic. That's great. But the first thing you always want to do is you want to pay your bills on time. What do I mean by that? You do not want to have any 30-day or more late payments. It will report. It'll drop your score tremendously and you will have issues. It is very hard to overcome that when you have 30-day late. So number one is to always pay your bills on time. So hopefully that makes sense. Number two is you want to fight against having any types of items in collection. Okay, because collections are like these little baddies that get on your credit report and they're just very annoying and they can drop your score. And these agencies or these collection agencies, what they basically do is they will buy your bad debt for pennies on the dollar, okay? And then they will call you and say, oh, well, you owe us the full amount. Well, really, they've bought it for pennies on the dollar, a very small percentage. So basically, as much as they can possibly recoup, then that's profit, for them. So you want to avoid items going into collection. The most typical items that I've seen that go into collection are medical bills and medical accounts, and because people have legit issues and concerns and arguments and discrepancies with regards to what they're being billed on their insurance versus what they actually pay. Well, if that actually spreads over a certain period of time, it will turn into a collection account. So you want to be able to take care of that. Now, truth be told, certain medical collections do not negatively affect your score as much, but still you want the landscape of your credit to be free from weeds as possible. You want as much beautiful green grass as possible. So, you want to avoid collections, whether it's a credit card, whether it's some type of an installment loan, something that you have fallen behind on, and you've gotten the letters, you've gotten the phone calls, you've gotten the threats of it going into collection status. You want to stop it before it gets there for sure. So that's the second thing. So another thing you want to do is if you have credit cards, of course, as we've talked about before, pay them on time. But number two, do not run up high balances. When you run up high balances, what that does is the different credit repositories, Experian, TransUnion, and Equifax, they all have different formulas and algorithms that say, oh, okay, well, you're paying this on time. However, you are maxing out the amount of available credit that you have. As a result, it increases the probability that you're going to go get another credit card because you've maxed out the one, you've maxed out the two. Well, obviously you're using that as a source of funds. Now you're going to increase the amount of leverage you have against you or the debt load against you That will make your score come down. Okay. Now, here's a myth buster also. I've talked to many people who say, well, I pay my credit card to zero every month. Do not do that. Okay. That is a myth that paying your credit card to zero every month will specifically help your credit score. Look, if you already own a home, you're not looking to buy anything or anything of that nature, then fantastic. Pay your credit card to zero every month. What I'm specifically talking about here is getting your credit score higher so that you can properly qualify for purchasing a home, whether it's during this COVID pandemic when we don't know when it will end, God willing, at some point, very soon. But if you're working to prepare yourself, then you do not want to pay credit cards to a zero balance every month. Why? Number one, primarily because it does not indicate that there's activity taking place on the account. So if you pay it to zero every month, then there's really no activity taking place. There's nothing there to help you generate a positive score. So what you want to do alternatively is you want to pay the balance down as low as you can, which fits within your budget. And definitely, I highly recommend signing up for auto pay. When you sign up for auto pay, then you eliminate the risk that you lose the statement, it gets lost in the mail, the dog ate it, things of that nature happen, and you pay it 30 days late. So that's my recommendation. You want to be disciplined when it comes to your credit cards. Use them only for specific purposes, only when you really have to. So credit cards are very important when it comes to your credit score because it's what's called revolving debt. You can have a car note, some student loans, and then maybe a personal loan. Those are what's called installment loans. Again, installment loans do not really have the same weight when it comes to building up your credit score as revolving debt. Well, why? Let's answer that question. Because essentially, there's no indication of how you're managing the debt. You just have a certain amount of money that you owe, and you're making installment payments on it every month. So again, it's not the best indicator of how you're managing your credit, of how you're managing your debt. So hopefully that definitely makes sense. So you want to have a balance. You want to have a nice breadth of different types of credit installment loans, and revolving, because that will help to prop up your score. Now, what if you don't have any credit at all? Okay. Or if you have a terrible score, your score is 520, 530, 540 for whatever reason, then what you want to do in that case is, if you can't get one of those credit cards where they have the super high APR at 29.99, for people with bad credit or people with no credit, okay, then you may want to try going to your local bank and getting what's called a secured card. A secured card is essentially where you have an account, you put a certain amount of money in it, $200 to $500. The bank will use that as the collateral, as the security for the card. And as long as you pay that card on time, meaning not 30 days late for at least a year, they will release those funds back to you, and then it will become secured. Now, that will help you to establish a decent credit score. It may not get you up to 800 because secured cards are weighed differently, but it definitely gets you going on the right path. And again, you don't want to get started going positively and then you have things that pop up in collections or this or that, because then what does that do? It negates all of the work that you've done. So hopefully that makes sense. Now, with regards to the credit issues and COVID-19, there are still many different types of loan programs that exist, even for people whose credit score is down as low as 600. It definitely exists, but it's going to depend on the type of program that you're looking for. Where do you want to live? What is your budget? What is your situation? That's what we review here with you at Visionary Lending. That's what we care about. We care about you, your family, your specific circumstances, your situation. What can we offer you? How can we serve you so that you can improve your situation, so that you can be better educated? That's what we're all about. So hopefully this was helpful. Again, it's not necessarily designed to take a deep dive into it, but just to give you a high level understanding of, okay, well, these are some things that you need to do, okay, in order to put yourself in the best position to increase the probability of you being able to qualify for a home. You know what? I forgot something. Let me mention this. If you are working with some of those like credit restoration agencies or whatever, what they tend to tell you to do is to dispute as many accounts as possible. Okay. So let's talk about that for a few minutes. When you dispute something, not to be a play on word, put a play on words, but what it does is it literally takes that account and it quarantines it. It puts it in a bubble. Well, what does that mean? It basically says, look, while this account is being disputed for a certain period of time, typically it's 30 days, it cannot affect your credit one way or the other. It's quarantined, it's put in the bubble. Okay. Now, the creditor has a certain amount of time to respond. Otherwise, typically that can be removed from your account. So that's not necessarily a bad thing, for sure, especially if you're renting and your rental lease doesn't end for the next 4 to 6 months or something like that. Then yeah, you're going to want to dispute some accounts and get some things taken off. But listen, if you're looking to purchase a home anytime soon within the next 30 to 90 days, and you have a lot of items that are disputes on your account, what's going to happen is this: the underwriter is going to look at your loan and they'll say, okay, we may approve your loan, but you have to remove X, Y, and Z disputes. Why would you have to do that? Because it gives an artificial picture of what your credit really looks like. They need to see what is your credit score, what's your credit landscape going to look like if those disputes are removed. And to be truthful with you, it's a 50-50 shot, really. Or really 33, 33, 33. Your credit can stay the same. It could plunge or the score could go up a little bit, but you are taking a major risk, and I would not recommend doing that. So if you are looking to purchase anytime soon, then you're going to want to get those disputes removed from your credit, okay? And there are actual underwriting guidelines which are very specific about that. And so if you have questions, definitely contact us here at Visionary Lending and we can go into those details. Okay. So again, thank you so much for your time today. Hopefully this was helpful and educational. We look forward to seeing you again soon. Please, you and your family stay safe during this time.